Live streaming is on.
All right, everybody, Event Trader here. We're going to get into the options playbook in a moment. Just want to address the PAL comments first. And some of the ones that are grabbing headlines here. Powell said the recent data shows a lack of further progress on inflation. Also noting that it's going to take longer for confidence on inflation. So really just kind of playing into what we've been seeing broadly across the board there. The S&P saw that quick downtick to 5080 before bouncing back here, but things definitely getting shaken up a little bit with Powell's commentary coming across. He's making good notes that the economy remains in pretty good shape. So that's got to get factored into things here. But so far, right now, that 5080 area is holding up during the session. So far, it continues to hold up in this little afternoon dip. Looking at the 10-year yield here, we got the 10-year now up to 4.68%. This is just shy of the intraday high. So with that backdrop, we're going to bring in Brandon here and talk a little bit about the. Hold on a second, Brandon. Sorry about that. Talk a little bit about this price action here. Talk about some of the broader markets too. Brandon, you're always pretty good at that intraday chart read. Obviously, that's what a lot of your trading is based around. I'd be curious as to what you think about the S&P here. And if you give me a quick second, I am going to grab the charts from Jim as we get into our discussion. And, we can kind of give a real time view of what's happening there in the broader market. So, Brandon, what are you seeing out there in this price action?
Yeah, I think I had a couple notes ready to go, and then Powell threw a little bit of a curveball in there. So, probably no surprises with all of the headlines and anticipated talks. So, yeah, like you said, I mean, looking like it's kind of a nice bounce here off of that low, just probably the knee-jerk reaction. I'm probably of the mind frame. I liked your notes from earlier where it just doesn't seem like there's a ton of reason for traders or investors to kind of jump out and start new positions right now. I'm still kind of long-term bullish, but with these headlines kicking around out there, it just seems like there's a little bit of a lack of enthusiasm to really push the market higher right now, unfortunately.
Yeah, I mean, just when you factor in the geopolitical issues as well as that break above the 450 level for rates, it's been tough to get people involved here. So, I mean, just kind of peeling back the onion a little bit here, Brandon, and taking a look back on the general market action. I'm assuming that you're following a little bit and watched the AMD comment from earlier, and we'll get into that trade, but more into the put side of things here.
I mean, that's kind of how I'm leaning. I mean, again, I'm longer term bullish, but like you said, it just kind of seems like as we head into the market close any day right now, it's just going to have that lingering thought of like, do I go to bed tonight and I wake up and Israel's gone and attacked Iran on a full-fledged scale, and it just seems like there's a little bit more, risk to the downside than to the upside right now. So just kind of leaning that way because I feel like a rug pull is more likely than a huge spike at the moment.
What kind of price action would you like to see here in terms of what you would maybe view as a shakeout? I know you're a technician and don't really get too deep into the weeds on the geopolitical front or on the earnings side of things, but I'd be kind of curious as to what you'd want to see on the broader indice charts that would have you feeling a little bit better about getting back onto the long side.
Yeah, so as a shakeout goes, this doesn't correspond between the two, but something that caught my attention recently was on the QQQs. You've got a gap from the 21st to be filled. And the reason I say it doesn't correspond is that you don't get the same gap on the NQs, but I think that would probably be a pretty good shakeout area. that just feels like we'd be pretty below the lower Bollinger Band. We'd get a pretty good flush to the system. And I haven't crunched the numbers, but I want to say off the top of my head, that would maybe put us at, I don't know, 5, 6, 7% lower from the all-time highs, which would kind of feel like a healthy shakeout to me. We saw kind of something similar when Russia invaded Ukraine. We got that big gap down right off the news, and then it recovered. And I could just kind of see a similar scenario painting out there. I think that these two geopolitical situations have a opportunity to be potentially much different. I hope it all goes away, but I feel like they could be different. So you got to take that setup with a grain of salt, but it's got some similarities to it. So that's kind of the area that I'm looking at. And on the NQs, that would correspond to, call it like the 17.7 level.
7 on the NQs. So let me pop up. We're going off the continuous here, or the June contract.
Yeah, the continuous. Sorry.
All right, no problem. So just pull that up. So you're looking at 17.7.
Yes, right around there.
Okay, so just pulling up the daily there, that would bring us to right about this area. It's not all that far away from it.
No, it's really not.
Yeah, and this would correspond to around the close on February 21st, right?
Yep, exactly.
Okay, so there's a few levels that Brandon's keeping an eye out on here. So again, with this Powell speech, keeping pressure on rates, and then, of course, expectations for an imminent strike from Israel on Iran, could be something that we see pretty easily in the next few hours here. So only about 200 points away on the NASDAQ, which is just about flat on the session. So, all right, well, we'll keep an eye out on this market price action as we go through. Obviously, seeing a bounce back following that flush down lower here in the NASDAQ, S&P back above 5,100. So they're definitely buying this dip here. Whether or not they can continue to hold it, that remains to be the big question, because I don't know, Brandon. One thing I've been noticing is these buy the dip plays, they seem to be getting trucked every time they try to step in the last few weeks. You've been noticing that?
Yeah, and that's probably why I'm leaning a little bit towards the put side. I mean, even just looking at the S&P and the NASDAQ futures, I mean, the last 5-minute candle, I mean, huge, long upper wick on that bounce. So, and again, you've got 3 straight candles now on the 5-minute chart on both of those that have really long upper wicks. So, just from a quick glance, and, again, there's so many different moving parts right now that things can change quickly. I mean, it's not necessarily what you want to see of buyers, really pushing the price down for 3 straight candles, and especially when you have the vulnerability that we have right now.
Yeah, and I am actually going to jump in here with a short in the NASDAQ at this 17,890 level here. I'm going to place that on, see if we break down here. So just entered in short in the NASDAQ 17,890, risking 30, going for a small quarter size position. So we'll keep an eye out on this. It's pushing up here, trying to squeeze us. We'll see if it's able to do that. All right, Brandon, let's take a look then at some of your recent trades out here. And you got puts on AMD right now. Definitely a little bit of heavier price action going on in the semiconductor space. So just kind of watching that play out. I got AMD. They slipped down at a 162 level on those Powell headlines, pop back up to 163.80, but getting some more of those long wicks you're just talking about. So what are you looking at on AMD?
Yeah, so AMD, yeah, I threw this out there yesterday as an idea, and I've just had it on my radar since. So, obviously we have a potential scenario where things could just turn, unfortunately, really ugly real fast if things took a turn for the worst in the Middle East. And, when you get those types of scenarios, I like to have something on my radar that, doesn't have a ton of support below it. And, if looking at AMD on the weekly chart, if we could, It's now
There
moved
you go.
below the 20-day on the weekly chart. And looking back to the week of January 15th, it's got that really big single candle. But, going all the way back for, several months, that's it for, support. The next thing you have is a moving average on the weekly chart is the 50-day around the 133.5 area. And you just don't have a lot of recent clusters of, support and resistance. You've really just got that one candle from that big move higher. So, if you get to a scenario where just everything turns red and the computers just turn to set to sell, there's not a ton that's really holding that thing up until the, really call it the 147.5 area. I'd probably play it safe and use the psychological 150 number. But if the computers really get going on this thing, it could turn, I think, pretty ugly pretty quickly. I think longer term, it would probably create a pretty nice little buying opportunity. But just from a technical perspective, could create a great put opportunity. So that's what I was thinking longer term. And then just intraday on the 5-minute chart had a pretty nice little dip around right before lunch at 11:55, and just kind of started to hover around that 163 area. It wasn't really getting that great of a bounce, and at the same time, I kind of saw Nvidia coming under a little bit of pressure. Looks like it was going to make a lower high on the day. And again, just kind of having this on my radar, I just didn't like that bounce, so took a quick put opportunity. And again, just kind of with the thought that if I were to pick a side going into the close of markets these days, I'd probably lean a little bit more to the bear side just because of overnight risk. So I took a shot on that, and yeah, like you said, I mean, we got that quick bounce, but we're right back at that 163 level. So if the market keeps coming under pressure, I think it could take another leg lower. And I don't know, if I got lucky, maybe fill that gap from this morning.
Okay, so I'm just kind of watching it here. It's fighting to hold that 162.80 area, which has held through most of the morning session, 162.60, or afternoon session, I should say. So we'll continue to keep an eye out on that. Also continue to keep an eye out on this NASDAQ short, of course. We got it about 16 points into the money here. We'll see if it's holding up here. Obviously, talking with Brandon on this and my charts I am using for it. So, I'll try to update you accordingly, but be looking to bank a piece here. We got a flush down below this one. There we go. Let me just throw that up, Brandon. Sorry, trying to do two things at once here, right?
I thought you're usually doing like 3 or 4 things at once.
Yeah. So we're gonna move the stop to 17,900. For what we about 4 points here. So sorry about that, Brandon. You know how things go around here. All right, so banking a piece there, just for about 40 points. This is breaking down nicely. 17,820 would be the next level in case Brandon and I are chatting here, and I don't have time to pass it along. But so a little bit of a pickup in steam to the downside on that front. So Brandon, AMD, you put that in. You looking to bank anything anytime soon on this?
I mean, the trade is just about at even, because it did get a little bit of a spike prior to Powell. I mean, not a spike, just a little bit of a move higher. So trades at about even. And yeah, like you said, I mean, the markets are now looking kind of vulnerable here with this selling. Flipping back to the indexes, you got that long lower wick from that initial Powell reaction, and those are some new longs. So I think we've got some potential vulnerability there if the indexes kind of eat that tail.
Yeah, and we talk about the eating the tail all the time, and This would be exactly what we're talking about. Some pretty large down volume. That definitely looks like an algo that was tuned into Pal's commentary. Just keeping a close eye, see if there's anything else. Tries to be transparent, predictables. Learn the lesson of bank stress early. Blah blah blah. Noted firm inflation last quarter has introduced new uncertainty over when and whether the Fed will be able to lower rates this year. So that's definitely an interesting comment because the when and the weather is definitely new to the market parlance. So keeping an eye out on that here. All right, Brandon. Now you got AMD out. That's the only name that you currently are involved with, correct?
Correct.
Now, there are a few names that have been on the radar here, and we're going to start with Shopify, SHOP. You were keeping an eye on this one. You want me to pull this up as a daily or a weekly?
Just daily would be great.
All right, so there's the daily chart. Looks pretty ugly. You can see 200-day moving average is the thick red line right around that 60, what we'll call it 6803. So not too far from there. What are you looking at in Shopify?
Yeah, I guess great minds think alike. That's the exact word that I used in my notes this morning is some ugliness on that chart. But with that 200-day there, if you look at that chart, you kind of got somewhat of a steep downtrend line to it. And last week on, what was it, Thursday, had a hammer candle on some pretty good volume. So, that's kind of one of the things that starts to catch my attention of a potential reversal. So then the last 2 days obviously made a continued move lower as the markets have been under pressure, and the volume's been kind of picking up the last couple of days, and you start to approach a key level. So just thought it was a bounce candidate, and like I said in my notes, there is some ugliness to this chart with the moving averages for the most part all facing down, actually minus that 200-day. So it would be more of a short-term bounce candidate. And also on the RSI, the last time it reached this oversold level was back in August and ended up making a pretty nice run, actually. Probably a little bit of a different scenario with everything going on right now, but those are still things that, as a technician, I try to pay attention to. And yeah, this morning came in and hit that 68 level. And actually, if you took an options trade on it, and you would have made a quick, actually 50% or so on your money. I didn't end up throwing it out because when it hit that 68, there just wasn't a ton of volume that came in. I usually like to see that before taking a trade, just because that's a little bit of a sign of the market makers building a position before letting it go higher. So again, just a kind of a short-term bounce candidate, actually provided a real nice trade. I didn't get involved because of the volume reason, but again, I think maybe longer term, if we get some positivity headline wise and the high growth tech comes back, I think it actually has a little bit more upside. But again, kind of an ugly chart, like you said.
Yeah, and one we'll keep an eye out on. Um, what would be some levels that you would definitely get involved in here then?
Yeah, I mean, if it can't hold that 68, probably turn into a pretty nice little put candidate. And then it's been struggling around the 69 level today. So, if the market does pull back here and it can kind of hold up around there, might actually be an okay candidate to take like the 70 call for. And again, this would be as long as the market doesn't come crashing down on us. But if it can kind of hold up around this 69 area and the markets, have a bounce for us, could create a little quick call opportunity to the 70 level.
Okay, so there's Shopify. Another name that you have on your radar, Lam Research, semi-cap equipment provider there. We were talking about semis earlier. And this is one, it's held up pretty well when you compare it to the rest of the market, just kind of straddling that 20, but there is a little bit of a descending triangle when you're looking at the daily, I suppose. So what is it from Lamb Research that's sticking out to you, and which way would you be leaning on it?
Yeah, so like you said, I mean, it has been holding up pretty well, but it has that island that it formed. So had that big gap up on the 20th, and it's just been kind of hanging out there. And then starting on April 5th, it ended up having several straight inside days. So from a technical perspective, we've got not only an island, but then we've got several straight inside days. And yesterday had a pretty ugly day yesterday, as you would imagine, like most other tech. And that not only broke the island, but it also broke the inside days, put it below the 20-day, and also put it below the close of the gap up. And it also created the first test of the 50-day. So, for me, again, watching charts, that's several different things that all of a sudden point to some potential pressure. So I think in this case, if it were to move back up to that 20-day, it might be a potential fade candidate. And then if it were to, break below that 50-day, could make a really nice put opportunity. So, again, you got to be careful of the head fakes on those islands and the inside bars and stuff. So, a fade candidate around the 20-day, but if it continues to push back up through there and back through that mother bar from earlier in the month, would flip over to a potential call candidate. But again, with just the pressure out there and multiple different technical things to it, I'd probably lean slightly towards the put side on it.
All right, leaning towards the put side. Just keeping an eye out here on the markets too. Just kind of dancing around that 17,890 level. Had that one dip down, so it was good profit taking area for sure. Tightened up the stops. Nasdaq now around 17,885. Looking for buyers up here above that 17,895 area. If that pops up above that, my assumption is I'm going to get taken out on the remaining piece. But this is a big level for the bulls to try to push through. So Brandon, circling back on the Lamb Research here, I think kind of what you're talking about here, that flexibility. This is really at the time in the markets where you've got to be open to accepting the pattern and not trying to fight it. So what are some of the things that you look at in general when we're at a moment like this where you're flexible obviously and you could jump in from put to long, but do you go from a top down perspective? Are you looking at the broader market and going off that? I know you like to be leaning in one direction, or are you going off on individual names here?
A little bit of a combination. So a name like a Lamb Research I might have on my radar, and then looking at the different things, you got AMD that's coming under a little bit of pressure. NVIDIA is coming under a little pressure. You've got the SMH that has now spent last 5 or 6 5-minute candles below its 20-day, which kind of looks like it wants to maybe, and I can't confirm this yet, it kind of looks like it wants to start sidestepping its way downward after a nice move this morning. So you've got obviously now the market's kind of sitting at these key levels. You've got the sellers that are coming in, and then you kind of drill down to the sector, and when you start to see the what you call it, the commander of the market with NVIDIA, getting a little bit of selling pressure, kind of starts to intrigue me for the sector overall. And then when you've got the idea like a Lamb Research or an AMD in your back pocket, that's usually what would make me kind of jump on something.
All right, so we'll keep an eye out. Just going to circle back to the Nasdaq short here, down at 7. Hasn't been able to find any buyers above 17,890 at the moment. And again, Brandon was pointing out these long wicks up here. That's all trapped longs there. So I suppose you can make the argument of trapped shorts going on at the other wicks too, Brandon, right? if you're just looking at this NASDAQ chart here.
Yeah, they sometimes don't make it easy on us with trapping people on both sides of the equation.
Yeah. Yeah. So just watching this play out here, 17,890 is definitely the level that we want to keep an eye out on. If it gets through that, I could definitely see a run up to the 17,920 level. Again, we have tightened the stop. So willing to see and let this play out, because if this gets a rollover, it could be a nasty puke, that's for sure. So there they are. They're trying to build it up right now. All right. So let's see. We talked shop. We talked Lamb research, and now we're going to talk Enphase ENPH. Obviously, a solar inverter. Solar's been getting hit pretty hard the last couple of weeks with the rise in rates. Brandon, I'd be curious as to your thoughts on this. I got the daily chart up right now, and obviously was making a nice ascending triangle going in from the mid-March up until about a week ago, bumped into that 200-day moving average and is now rolled over, and we got rates popping up too, which is going to be an added issue for the solar company. So what is it in phase you're seeing right here, and what's your plans for possibly playing this name?
Yeah, so what actually caught my attention was on the daily chart, going back to really the lows of November. That's created just a really big pennant pattern on the daily chart. So, again, technical patterns are what catch my attention, and kind of like you said just a moment ago, of being able to play both sides of the table. So, the solar companies, you've obviously got the issue of the rising rates, put some pressure on them. But, if we get any sort of, negative headlines out of the Middle East and, oil spikes, again, I know that renewable energy for what they do with the solar panels is a little bit different than, filling up our cars with gasoline. But still, it could be a slight beneficiary of any sort of rise in energy prices. So, it's got that technical pattern. It came in from the lows of November. So, I guess from a technical standpoint, the path of least resistance would be to continue on to the upside. But if it breaks it to the downside, you've kind of got a nice put opportunity in your back pocket. So again, you've got, a potential put and call that's on your radar, which I think in this environment, like we've been talking about, is a good idea. So now is kind of interesting. It broke the bottom of the pennant. So you'd start to think downside, but all of a sudden you've got a hammer candle that's forming on the daily chart today. Volume so far is decent. I'd probably like to see that a little bit higher on a reversal candle. But all of a sudden that has me thinking, okay, is the break to the downside of the pennant a head fake? And, I've talked about this many times. If it is a head fake, that is, one of the best times to enter, because you've got shorts that jumped in and you've got people that sold that, have some FOMO and they jump back in. So, just kind of watching that lower trend line that it's been seeing since, for illustration purposes, the starting at like the 18th, that real nice trend line that it had that it broke below. If it can reclaim that, I'd be maybe thinking head fake. But again, that's kind of one of the tricky things with a thing that could get a little bit of a tug of war in this current market environment. But again, just an idea to have on both sides of the table, I think.
All right. So another name that we will be keeping an eye out on there. So, all right. I think any other names that you have out at the moment there, Brandon, on your radar?
No, I think
missed.
that covers it pretty well.
Hey, let me ask you, were you paying attention to SLV, the silver ETF today?
I was not. I know that chart traders had a real nice move on that one. I've traded that one a couple of times in the past on the options front, and it just didn't work well for me. Quite frankly, I was a young trader and I probably wasn't educated that well on options and or the the ins and outs of the very volatile silver market. So I haven't looked at this one in years, to be honest with you.
Well, let me ask you. Take a quick look at the options activity. There was a ton of calls being being put in there, and the general thought with the people I was talking to is that these were covered calls going in. I just like your thought on that. If there's anything that you see from the price action in SLV, and if this would be something that would have you kind of raising a red flag, or would you be looking at buying it, or a little bit nervous of selling it, that people are going to kind of dump their positions on these covered calls?
Yeah, there's definitely, like you said, the coal sizzle index is up around 2 right now. I mean, we've got 745,000 calls to 70,000 puts. So put call ratio 0.096, so very, very low. Um, for me, just because this has had some pretty good momentum, it's one that I hesitate betting against personally. Um, and you would think that if things happen, there would be maybe that flight to gold and maybe silver would get another bid. But yeah, no, that's some pretty interesting, some call activity. Actually, looks like the quite a bit that's coming in on the monthlies that expire this Friday, as we have a monthly expiration. So the 27 and the 28 strike, some pretty solid volume. So yeah, I don't know. Maybe people are betting on some overnight activity as well on that one.
Yeah, so I'll just keep an eye out to get squeezed out from the Nasdaq here. We had tightened that stop up, so no, and we had banked some decent profits on the way down. So uh, basically, turns out to be a flat trade for us. But real nice little pop going on there on this one is people are kind of just playing around with markets. Talked about that 17,890 area. Once we're getting above that, definitely was able to pop a lot of those shorts out. This is why we're just kind of quick to take some profits and trail that stop down to avoid a move like this. So nice little squeeze at the moment in the Nasdaq. We'll see how far they're able to push this here. So, all right, Brandon, let's move on. We're going to talk a little bit about your trading here, and just your general philosophy in terms of why you post what you post, what you're looking for, and explanations in terms of length of terms, because there's been some feedback questions just looking for more details on that. So why don't we start off this discussion by taking a look at your applied materials trade that you recently took?
Yeah, so applied materials, and yeah, like you said, just there's been some questions and some feedback lately on just kind of how I take some profits and losses and things of that nature. And we're always getting new subscribers on board, so just thought it'd be good for a quick little refresher. So applied materials. So this popped onto my radar because it's got a pretty nice little ascending triangle that's formed on the daily chart. So ended up taking a trade on it last week, and it ended up taking a little bit of time. I was a little bit early to it, unfortunately, which is one of the hard things with the options world is if you're a couple candles early, it can certainly affect your P&L quite a bit. But I liked the trade and I stuck with it. And a couple of reasons why. In the morning before I took the trade, I had a real big green candle come in with about 200,000 shares of buying volume. And for perspective on applied materials, for basically the rest of the day, you were probably looking in the 10 to 15,000 shares traded per 5 minutes. So some pretty big volume. There was some decent call volume that was coming into it in the morning, and it was part of the bigger term technical pattern. So, at one point, that option was down about 50%. So, again, I was early, and 50% was honestly behind the scenes. It was making me sweat, but I liked it for those reasons, and I stuck with it. And Unfortunately, with options, especially on a Thursday, if I ended up being wrong there, then at that point in the week, it's probably going to turn into a full loss. But I liked it, and I liked what I saw, and I just wasn't exiting. So, again, if you get to a point where you're starting to get nervous about losses, sometimes with these options, you do get out, and then you get a spike, or who knows? Maybe you get some news or something like we just saw with the spike in the market, and it helps recover that trade. But on the flip side, it doesn't always work out. So, again, if you get to a point where you're uncomfortable with the trade, don't be afraid to get out. And on the other side, a couple weeks ago, I had thrown out actually a meta lotto, and it quickly went up about 200%. I want to say it was like 15 to 30 minutes. And again, that's kind of common for a Friday afternoon trade. And it also gave a couple chances to exit around 100% profits. So I was kind of pushing that trade a little bit. I thought it maybe had a little bit more to it based upon what I was seeing. So I didn't end up sending out a official alert about selling, but again, if you're happy with those returns, pull that trigger without me sending out anything, because again, I don't think anyone's too upset about closing out at 100% return or 200% return as you head into the weekend. And the other thing that's come in a couple times is some have been wondering about longer term trade ideas from me. And I got to be very honest with everybody. If I was doing longer term trade ideas, they would honestly be a lot less stressful for me than some of these short term ideas. But since I'm not actually taking those, I don't, have my eyeballs on them. So I just don't post them. I just have always done the weekly expirations. I really don't go out a month's time. Honestly, probably not my strongest point from an options management perspective. I think I'm good at finding the technical charts of longer term trades, but maybe not the best at setting up options, a month, 3 months down the road. But what I would recommend to people in that regard is I do try to post ideas in my morning notes when I see some sort of longer term idea that could be applied to longer term options, or honestly, even just utilizing stocks. So, a couple of examples would be that applied materials triangle. I mean, that's, again, barring any meltdown in the markets, that's a pretty good technical pattern. And if it breaks it, it's going to, it's probably going to make a pretty nice little move. Quick glance here, just using technical rules. I mean, the top of the triangle, call it, starts in the 212, 213 area, and it started down around 198. So, you could be talking about a move up to like the 225 area. So again, that could be very much utilized with stock. It could be utilized with longer term options. I'm just not taking those. So, I don't post them. There was another trade I posted a couple weeks ago on Starbucks. I found a descending triangle on the daily chart, and I talked about it towards the end of March. And if you look at the move that it made once it broke that triangle, I mean, it moved from 90 down to a low of almost 84. So that would have been a really nice short if you had shorted some stock, or if you had gone out maybe a month's time, a couple weeks time, and, bought like the 85 puts on it. Again, that would have been a really nice trade. I'm not taking it, so I don't feel, comfortable posting that. So, again, for anybody looking for those longer term ideas, I do search a bunch of different charts every single day. And anytime I can find those things, you've probably noticed I've barely ever thrown out a Starbucks trade, but I posted it in my notes because it was a good technical pattern. So I just recommend kind of glancing at some of those things in the morning. And, if you like it, then maybe think about taking it. And, if not, then move on to the next one.
All right. No, and I mean that's all good points. I mean, it's tough for us to be on top of all the different names out there, but what Brandon does in those early morning comments is continue to provide some good color for people and some different setups. So, you don't always have to wait for Brandon to hit this fire button on it or anything like that. If it's a setup that fits your risk and reward system, don't be afraid to take those plays. That's for sure. Especially, if Brandon's got a good read on the chart. It's tough to post 15 different trades, right, Brandon, and try to get that in to like we talk about it all the time. You'll have 5 or 6 trade setups and you throw 1 or 2 out there and it's inevitably the other 4 that always run on you, right? So just kind of keep that in mind when you're looking around at things. Look for the different setups that are out there and just kind of work your way off that. So all good points there, Brandon. We're going to be posting some of these comments too. And if anybody's got any follow-up questions for Brandon, definitely feel free to let us know. Just keeping
Yeah,
an
no.
eye.
Oh,
Go
I'm
on.
sorry, Gavin. Go ahead.
Oh, I was just saying, just keeping an eye out on the markets. Obviously, some pretty whippy price action going on out there. That big pop that we had, that's gotten reversed down here, dropping a couple of points going on in the S&P, the Nasdaq. That's come back down through that 17,890 area, which was our original entry on the short. We, of course, tightened our stops up to 17,900. So it's going to set up as a key area for us to watch. But moving along, then, Brandon, we were going to talk about this week's concept, and that's going to be the married put. So why don't you give us a breakdown of what the married put entails?
Yeah, so this week's idea, I think, is pretty basic. Figured with everything going on and the fact that the charts have changed on us about 6 times just from the start of this conversation, that we'd keep it simple. But sometimes the simplest of ideas are the ones that we maybe just don't think about on a regular basis. So married put is just simply when you buy a stock and a put at the same time. So this would usually be implemented if a trader has a bullish outlook but is concerned about a potential near-term uncertainties in the stock price. And when I was trying to come up with ideas, I looked at that description on a website and I was like, well, that just really feels like the market environment that we're in right now. So, obviously we've been in a pretty good little bull run, but we've got the overlay of geopolitical headlines and spiking rates and all that good stuff. So it very much seemed like the market environment that we're sitting in at the moment. So, and married puts, they're really a lot like covered calls. The difference really is that instead of selling a call option on the underlying stock, like you would in a covered call, you're just buying a put option to protect you from the downside. This isn't something that you'd necessarily want to consider on a regular basis because you'd probably end up, losing a good amount of premium over the long term. But, again, right now, if you're sitting here and you're like, all right, I really like XYZ stock, it's come in 5% from its high, on this little market pullback. I think this is a pretty attractive entry. I think their earnings are going to be good coming up. But I do have that just kind of sitting in the back of my mind that, things could quickly escalate in the Middle East. You might implement this strategy, but again, if you're just straight bullish, this idea just doesn't make a whole lot of sense.
Yeah, no, I mean, that does make a lot of sense. So, I mean, basically, you would view this as what would be the best time to use this. Obviously, today's market would be some good examples, but would the end phase, for instance, be a name that you could be looking at?
Yeah, I think that's actually a great example. And again, you'd want to be bullish on the sector or the stock. So, again, if that pennant breaks to the downside, again, this is coming from the technical trader. Maybe the fundamental guy in you, Gavin, might disagree with me on this one. But if you're bullish on end phase, this would be the time to potentially consider something like that. But, if that pennant breaks, then technical selling is going to kick in, and it's probably going to take a pretty nice little pullback despite, what the fundamental outlook is for the company. But yes, if you were saying, all right, well, we're seeing spiking energy rates. I live out here in Oregon that's been, hit by wildfires, and they need to basically put all of their cables underground. And you got all sorts of different things that unfortunately are making energy, spike up. And I look at it, and my sister coincidentally just got a new ENPH thing put in at her house. And I say, you know what, everybody else is going to be doing this. I'm bullish on it. But if that pennant breaks, maybe I want a little bit of protection there with a put. Or if just, again, we wake up to a negative headline in the morning and the stock gets smoked, I want to protect myself. So yes, definitely that is a great example.
All right. Hold on, just keeping an eye out on a few things. Equities coming back down towards the lows. We'll see if this is going to break down. Definitely on some volume. Looking at the S&P down at, or NASDAQ down at 17,860 level. The S&P here, all obviously getting whipped around with Powell's comments down at 5,088 right now. So watching this action play out. So, all right, Brandon. So we got the married put out there. Now, of these option strategies that we've discussed over the last couple of weeks, a lot of ideas around the potential choppy trading environment. Do you have a preference? Do you have a ranking for these, or does it really just simply completely depend on the chart setup and risk tolerance?
Yeah, I think that's kind of somewhat hard to answer because, yeah, you're right with the chart and the risk tolerance. If I were to rank them right now, let's just say, again, you're comparing this to a covered call. If you were to write a covered call, you're going to get that premium deposited into your account. And the thought there is that the stock would be either flat to slightly lower, and you just get to keep that premium. That's going to be your max profit. In this case, if we do wake up and all of a sudden the market's down, 3% one day off of a headline, having a put out there would, if you take a put at the end of the day and you wake up to a 3% down market day, that put's probably going to have a pretty nice little payoff to it. Again, you'd lose on your stock, but that put's probably going to help soften that blow quite a bit. So in this case, I'd probably lean in that direction. And, the spread trades, I think, are pretty smart too, just because they spread that risk out. Again, we talked about that on multiple different calls. You're not going to have as much upside on your trade just because it is a spread trade and that's how they work. But you're definitely getting that exposure for less risk. And again, if it works out, it will still create a nice little payoff for you, and you've got that protection because again, you've got multiple legs of an options trade.
All right. So Brandon, anything else that we haven't touched upon that you wanted to discuss here then?
Yeah, just real quick, couple quick points. So again, if you're going into an investment and you're just like, all right, I absolutely love this stock. It's pulled back a little bit. I think this is a great entry. I don't care about short-term swings if it comes in a little bit more. This idea is probably not for you. You're probably just wasting your money on the premium. And you're just I try to give examples like the other calls as far as losses and gains go. So your loss potential again in this scenario is limited because, well, you would lose on the stock. Again, if you woke up and the market's down 2-3%, the put is going to help offset that. And this strategy, technically, your gain is unlimited because the stock price has the potential to climb again to infinity. Take that idea with a grain of salt, but from a technical perspective, it is unlimited gains. And if everything did climb, again, your stock would pay off, and your max risk is really just the put premium that you paid because it would expire worthless. And then yeah, similar to some of these other spread trade strategies and other things that we've talked about, this is more of an insurance policy. So it's more of a hedge type capital preservation strategy versus, get rich strategy.
Yeah. And capital preservation, that's exactly what we want to do in this current choppy and market environment, right? So, I mean, that's why a lot of these systems that you've set out in different trading strategies make a lot of sense given how whippy this market's been. So definitely appreciate you putting all these out there. We'll have to kind of go back and do a recap and one of these days and just get a sense for who's using what out there in the subscriber land. Be curious if anybody is using some of these strategies that Brandon's putting out there, because it's definitely pretty helpful in what we've been talking about. That's for sure.
Yeah, I'd love to hear if anybody. Again, I've said it on a lot of calls. I mean, some of these things are just completely irrelevant to some people, and that's part of the reason we have the conversation, is just throw the ideas out there. Yeah, I'd definitely be interested in that. And as always, I've got my list going of different ideas to talk about, but always looking for what people want to hear out there. So if anybody's got any topics, and it doesn't involve some 18 leg option strategy that's going to keep me up at night trying to figure it out, I'm all for talking about it.
Yeah. Yeah. So no, we'll definitely be keeping an eye out on that. Everybody, please feel free to write in. Be happy to answer any of your questions here. Just make sure we don't have any real time. Let's see. Okay, we got a few. We'll circle back to them a little bit later, but for now, keeping an eye out on this broader market here, as it is coming in under some late day selling pressure, getting back in towards the session lows, trying to protect that 5088 area there in the S&P. The Nasdaq looking at 17870 right now. As that tries to hold up. So buyers are definitely trying to step in and keep things going here for so we'll see if they could kind of control things going into the afternoon, or if we're due for a wider breakdown, as there are some anticipation for Israel to attack Iran in this evening. So that's always another fun item to kind of keep it in place here. So with that, Brandon, we'll let you get back to your trading over there. I'm sure things are shaking around, keeping an eye out on this AMD. And we'll get back to, we're just going to stop this temporarily, and we'll have audio back up and running here in a couple minutes.
Sounds good. Thanks, Kevin.
Thank you. Talk to you later, Brandon.